Peter Andersen, Senior Portfolio Manager for Congress Asset Management, joins us from Boston to share his views on the market action. Peter, how do you make sense of it all?
Well, it is very challenging for an investor to make sense of it all, but we do expect these rough patches to continue, but over time we do think that the market will trend upward. And we urge investors, especially on the U.S. equity investment side, to remain patient and stay invested and ride through this rough patch, so to speak.
Okay, well, how patient do they have to be? How long is this rough patch going to last for?
Well, it depends on a number of things. First off, we've got this debt overhang, the so-called ceiling of debt of the U.S. Treasury market. That has to resolve itself, and we all do believe that it will be extended, and that will happen the end of July, early August. And earnings season, of course, is coming up, and we're starting to see companies pre-warn on the negative side, but also on the other side, we're seeing a good amount of merger and acquisition activity. In May, we saw Varian Semiconductor be acquired by AMAT. We saw International Coal Group acquired by a competitor, and certain companies declaring themselves REITs and raising their dividends. So it's a mixed bag, as we say here in the United States. But the general trend is upward. And I would say by the end of July and August, when we start seeing some resolution with the federal policy and the Treasury ceiling, the debt ceiling, things should be a little bit more clear to understand.
Mm-hmm. Now, Peter, you were focusing in on domestic issues in the U.S. What about what's taking place in Europe? Do you care what's happening there with Greece possibly looking at default, and how does that affect, I guess, your holdings?
We absolutely care. We are watching that very closely, and with the Greece situation, we are concerned, of course, that they will declare a default and that might cause a chain of events for other members of the EU. So that's certainly a very serious concern. But on the other hand, what it has done is it's bolstered the appetite for U.S. Treasuries. And as you know, in this country, Treasury rates have been held artificially low, some would say, by federal policy. But on top of that, we're getting the additional support outside the United States by increased demand in U.S. Treasuries as a result of what's gone on in Greece and other EU countries.
Okay, so what are you saying, Peter, this rush into Treasuries, is it a good or bad thing?
Well, it can be good for an investor because we always advocate having some fixed income in the portfolio as a buffer against all the equity volatility. But it can also be bad to have too much of a good thing, so to speak. And we warn investors against over-allocating their portfolios to Treasuries because we do certainly expect that as the economy does improve and as growth starts to recover and heat up, that we will see increasing rates. And as you know, increasing rates are the enemy of Treasury values, and those will start to erode. So a little bit of fixed income is a good thing.
All right.
Too much
Peter,
is a bad thing.
Before I let you go, talk to me about your longs and your selective shorts. What are you going long on?
Oh, we are long on a number of industrial companies, mainly U.S.-based companies, also some retail companies, a small company called Sally Beauty Holdings, for instance, which is a retail supplier of beauty supplies, and it has done very well for us. And we're also a holder of Iron Mountain, which is physical document storage, and American Tower. On the short side, we have to be very careful with what we disclose.
Okay, fair enough, Peter. I'll let you get away with that this time. Peter Andersen of Congress Asset Management joining us from Boston, Massachusetts.